Hello everyone, welcome to the Kai's Family of Services November update. As we get closer to the holiday season, here are some updates from our leaders.
Hi, Craig Garcia with Capital Partners Mortgage. This month I wanted to give you a couple of updates regarding condominium lending and some exciting news that we have. So the first is about the FHA single unit approval condominium process. A couple of months ago I mentioned that we were not that excited about this process because FHA has some leasing restriction rules that was going to make it difficult to approve the projects for FHA financing. Well, in the lead up to the release, we were able to confirm with HUD that leasing restrictions are not part of the review process for the single unit approvals. So now we're excited because that thing that is a barrier to getting condominiums fully project approved is not something that's required in the review for just approving an individual buyer to get an FHA loan in a project that doesn't have an FHA approval. So we are looking forward to doing those. That starts right now. The other topic that's exciting with condominiums is regarding recreation leases. And so a recreation lease is where you have a condo where they have, instead of owning their own clubhouse, pool, their common amenities, when the condominium was originally built, the developer usually has said, hey, we're going to keep the ownership of the pool and the clubhouse and amenities, and we're going to make the association lease it back from us. And they set up usually a 99-year lease. So the recreation facilities for the condominium are really owned by the original developer oftentimes, and the association leases those things back from the developer. That topic has typically made projects ineligible for Fannie Mae and Freddie Mac financing. And so what happens in those projects often is you get portfolio lenders that will lend in there. Well, we've been able to negotiate a special variance with Freddie Mac regarding recreation leases. So we are going to be able to, by and large, most of the recreation leases that we've seen, we'll now be able to lend in those projects with regular Freddie Mac lending. And so it really does open up some communities to some great loan programs. Anything we can do with Freddie Mac, we'll be able to do it in any of these projects, so long as we can get the rest of the project approved. So we can do a full approval in there, we can do a limited approval in there. And so it's really exciting, and it is kind of an exclusive for us. So that is actually starting this month as well. So we'll be looking forward to talking more about that with you. Hope you have a fantastic month, and we'll see you next time. Bye.
Hello, I'm going to speak to you today about roofs. Roofs is one of the biggest issues that creates eligibility concerns for your buyers, either when you're selling their house or when you have a buyer buying a new house. So I'm going to start by describing the three different types of roofs, or actually telling you about the three different types of roof. You have a hip roof, a gable roof, and a flat roof. That's all about the geometric structure of the roof, and the insurance companies look at that obviously because the way the roof is built, the better they can withstand wind. A flat roof on any property, especially over the living area, will create the biggest eligibility issues on any property being able to get insurance. Now that we've discussed the three different shapes of roof, I'm going to talk to you about the different types of roof. First, you have a tile roof. A tile roof is typically good for 30 years. That's what the insurance carriers are offering coverage on. A shingle roof is somewhere between 15 and 20 years. And then you have a metal roof, which sometimes can go up to 40 years. So therefore, if you're looking at a home and it's older, if you have a metal roof, you're in the best shape. A tile roof second, shingle is third. So now that we've known the types and the shapes of the roof and the types of material that are putting on the roof, and all those create eligibility issues. The last thing is what we get is the 4-point inspection. That 4-point inspection will give us the lifespan of that roof, which we will then pass on to the insurance carrier. So you may have a newer roof on a property. However, if they still do not have the necessary life expectancy on the inspection, they may create eligibility issues. So those three main things, the shape of the roof, the flat roof being the biggest concern, with the hip and the gable being of less concern. And then you have metal roofs, which put you in the best condition, tile roofs, second best, and shingles, which is sometimes the hardest, as they have a 15-year life expectancy. But it all has to match with that 4-point inspection saying that there's at least a certain life expectancy on the roof. So the roof can be very important. Take a picture. If you have some questions, send it to us. We will help you. We'll get you the answers. And again, this is for your people that are listing their property so that you know any hurdles they might have to getting insurance, and also for people that are buying a new property to make sure that they will be able to get insurance on that home. Thank you very much.
As we enter the month of November and the holiday season, I'd like to focus on the theme of gratitude and appreciation. When it comes to title insurance, there are many things to be grateful for. Here are just a few. Number one, peace of mind. If there's ever a problem like a prior lien or forgery, you're covered. Number two, security. Pay a one-time fee, get a lifetime of protection on the property. And number three, ease and grace. Clear title from the date you purchase back means that it will be easier and faster if you ever choose to sell. Be sure to inquire about all of these and other benefits of title insurance with your rep. And remember, waking up every morning with an attitude of gratitude welcomes continued positive things into your life. As you take time to reflect during this holiday season, I'd like to share with you one of my favorite quotes from Robin Sharma. Gratitude drives happiness. Happiness boosts productivity. Productivity reveals mastery, and mastery inspires the world. With much appreciation for each and every one of you, I'm Marlene Rodriguez with Home Partners Title. Until next time, be grateful and watch the magic happen.
Hi, Benji Jean with Kai's Property Management. Here this month to discuss a topic that I touched on back in 2017, but is still just important today. What I'm talking about is those agents that collect 10% commission on a rental property. As we all know, 10% is greater than the first month's rent. What many of us don't take into consideration is that you, the agent, cannot take any monies as your commission from the last or security deposit. When a tenant moves in, typically they will present first, last, and security. Now, last and security by law must not be used for anything other than last and security. That money must go into either an interest-bearing or non-interest-bearing account in the state of Florida and cannot be touched until the time it is needed. Therefore, if you charge 10% commission on your leases, you must ask your owner for the difference in funds to be sent to you separately. The rest of the funds must go into escrow. Hoping this is helpful, and have a wonderful month.
As always, thank you to our leaders for the great updates. Now, on behalf of Family Services, we wish you an amazing month of November, a happy Thanksgiving with your families, and we will see you next month.